Hey, how you doing? This is Adam Post, publisher of more than 1,000 comic books and marketing expert covering Disney. Disney has a furious billionaire investor that now wants control of the company. He's gone after control of the company before, was not successful, did get Bob Iger to do layoffs, but the stock is now down 26% from when he originally invested in the company. He has around $2.5 billion worth of Disney stock, and he wants this company turned around. Let's get into the story. Before we do, please be sure you are subscribed to the channel. Click the bell for notifications. Give me a thumbs up. I really appreciate you guys. So Disney stock right now is at $83.73. It's up a little bit today because of Nelson Peltz. Because Nelson Peltz has announced, kind of privately, through the Wall Street Journal, that he's planning on going after the company again and now putting potentially several new people on the board of directors to get control of Disney. Disney, not that long ago, was valued at $357 billion. It's the same company it was back then, except now it's valued at $153 billion. Clearly something is wrong. That's pretty obvious. But by this point, Nelson Peltz has gotten to know Disney a little bit better. Certainly he's talked to a few more people. There's been enough mass media coverage of how Disney has damaged all of their intellectual properties by pushing an agenda that Nelson Peltz and his people have begun to understand Disney is not being operated as a proper business. I'm sure one of the things that really caught Nelson Peltz's eye recently was Charter Communications canceling 8 of Disney's 19 cable channels that they covered in exchange for getting Disney Plus for free. What that means is Disney's cable bundle is finally broken. It doesn't have the ability to just push whatever cable channels it wants on its cable distributors, but at the same time, they got great distribution in terms of numbers of subscribers for Disney Plus. Disney is not treating that change as fundamental or important. It's clear that aside from pushing their progressive agenda, Disney is just really not paying attention to their business. Stock analysts have recently said Disney is the only close competitor to Netflix. Netflix is considered a very serious business. So why won't Disney focus on the streaming business and build it up? For example, if they cut deals like the deal they cut with Charter to get Disney Plus distributed for free to all of their cable company customers, they would have more US subscribers than Netflix does. They would be at a lower rate, but they'd have massive distribution. Those kinds of fundamental business questions are not even being addressed at Disney. And that is not something Nelson Peltz is going to put up with. From the Wall Street Journal, Nelson Peltz boosts his Disney stake, seeks board seats. Activist Trian Fund Management, that's his investment company, has accumulated a holding valued at more than $2.5 billion. This also represents about 30% of Peltz's investment fund. So it's a significant amount. And since Peltz bought into it, there's no question he's lost a lot of money, anywhere from $300 to $700 million. Nelson Peltz is planning a fresh push for board seats at Disney following a relentless slide in the entertainment giant's shares. The activist investors Trian Fund Management, now one of Disney's largest investors, is expected to request multiple seats, including one for Peltz, according to people familiar with the matter, which means they leaked it deliberately. If the company says no, Trian could nominate directors that would be voted on at Disney's annual meeting next spring. The window for shareholder nominations runs from December 5th through January 4th, according to Disney's proxy materials. That's why we haven't heard anything from Peltz in the last several months, because now Peltz is giving Iger and the board of directors enough time to figure out if they want to cooperate with him or not, which they will not want to do because business is not what the priority of Disney is all about right now. That whole board of directors is captured by Bob Iger. They do whatever Bob Iger wants, and that's not going to be focusing on business. Peltz launched a run for a seat on Disney's board earlier this year after the company privately rebuffed his request to become a director. Peltz was talking to Bob Chapek when Bob Chapek was still CEO, and it was getting close to Chapek potentially letting Peltz on the board. That would have been great for Disney. It was a short-lived battle, however, with Peltz withdrawing his nomination in February after Disney unveiled a broad reorganization and cost-cutting plan that sent the stock up briefly. It also would have cost Peltz about $100 million to push for the board seat. They have to do a whole promotional campaign. He's done it before. He's done it before successfully with other major companies, but he was satisfied enough at the time. Since then, Disney shares have tumbled from higher than $113 to around $80, brushing up against their lowest level in a decade. In early 2021, after Disney notched several quarters of meteoric growth in signups to its flagship Disney Plus streaming service, its shares traded around $200. That's when Disney was worth over $350 billion. Now it's $200 billion less. Disney has lately been grappling with Hollywood strikes that froze television and film production, a high-profile battle over fees with large cable operator Charter Communications, and the prospect of sustained losses in its TV and streaming businesses. Tryon thinks that Disney shares are significantly undervalued today and that the company needs a board that is more focused, aligned with shareholders, and accountable people familiar with the matter said. Tryon has built up a stake in recent months to more than 30 million shares, a significant jump from the roughly 6.4 million shares it held at the end of the second quarter. Tryon, an influential activist investor co-founded by Peltz, had in its first fight been pushing Disney to plan for a successor to chief executive Bob Iger, who had held that role since 2005 before passing the reins to Bob Chapek in 2020. Last year, just as Peltz was kicking off his campaign, Chapek was fired by the board and Iger was brought back. Iger recently agreed to stay in his position through 2026. Tryon also argued that Disney had excessive compensation and lacked expense discipline. More than $300 million on the new Indiana Jones movie, more than $300 million on the Little Mermaid remake, and more than $300 million on the Marvels. All of their Disney Plus shows seem to cost about $25 million, at least the Marvel ones, or more per episode. That's outrageous. Netflix doesn't pay anything like that to make its shows, except for its biggest hit show, Stranger Things. Disney at the time said it continually refreshes its board with a focus on directors with industry experience, and argued that Peltz didn't understand the media industry. The company also launched a succession planning committee to advise on Iger's replacement. There was another billionaire called Dan Loeb, a very successful guy, also an activist investor. Activist investor is just somebody that invests in companies and then pushes them to make change. Sometimes the companies are cool with it. Sometimes the companies are not cool with it. Obviously, Disney right now is not cool with it. Dan Loeb, though, sold out his investment in Disney back in May and is no longer involved with the company. He definitely took a loss on his Disney stock. When Peltz called off his fight with Disney in February, he told the Wall Street Journal that Iger needed to execute on his promises. Iger has been taking steps to reverse the stock decline, some geared towards achieving profitability for Disney's streaming segment by September of 2024, a target set forth in late 2020. In August, the company unveiled a round of major price increases for its streaming products, raising the cost of the ad-free versions of Disney Plus and Hulu by more than 20% each. The company has also said recently that a plan to restore its cash dividend by the end of 2023 was on track. The payout was eliminated during the COVID-19 pandemic. Disney last month vowed to spend about $60 billion to expand its theme parks, cruise lines, and resorts over the next decade, almost doubling its investment in a division that provides its primary source of profits. $8 billion a year right now coming from that segment. There's nothing wrong with that idea for that investment. They aren't even doing anything risky. They're just expanding more on what worked before, and there's no indication they plan on opening new risky theme parks in places they don't already operate in. In July, Iger said that Disney's traditional cable and network television assets, which include ABC, Sports Network, ESPN, FX, the Disney Channel, and others, may not be core to the company, indicating that the networks might be for sale. He said that ESPN would seek an investment from a strategic partner. 2 months later, Disney announced it was partnering with gambling company Penn Entertainment to launch ESPN Bet, a sports wagering app. Neither move caused more than a brief increase in the share price, and Disney's 2.5-year stock decline accelerated through the end of the summer. Meanwhile, Disney is in the midst of exploring strategic options for its Star India business that they will likely sell. And they got that when they acquired Fox back in 2019, whose fortunes have soured in recent months after losing a key bidding war, the Journal previously reported. Tryon, like other activists, is known for encouraging changes at the companies it targets, such as a breakup or sale of underperforming divisions, or moves to improve efficiency with better use of capital. Peltz has previously served on the boards of other consumer-facing companies, including Oreo maker, Mondelez International, Kraft Heinz, and more recently Unilever, the maker of Dove soap and Hellmann's mayonnaise. From Yahoo Finance, Disney caught by surprise by the return of activist investor Nelson Peltz. Well, why would Disney be caught by surprise? They cost this guy a few $100 million at least and wasted his time. Disney knows very well they're focused only on pushing their propaganda, not even really looking at the business seriously. There's no board of directors that's going to hold management accountable. So of course this guy is sitting on a couple of $1 billion invested in your company. He's going to want to either see results or he's going to want to see you guys at least announce some strategic moves that make good sense. And if not, he's coming back at you. Disney's management team may have something in common with Snow White star Sleepy. They were caught by surprise, a person familiar with the matter told Yahoo Finance about Trian Fund Management Nelson Peltz's latest activist attack on the bumbling media conglomerate. Quote, they were caught by surprise, a person familiar with the matter told Yahoo Finance about Tri-Fund Management Nelson Peltz's latest activist attack on the bumbling media conglomerate. With Disney shares plummeting to fresh new 52-week lows, billionaire Peltz is jumping back in the ring to duke it out with superstar CEO Bob Iger. I did expect Nelson Peltz to come back at some point. He did have money tied up in Disney. The stock isn't doing well, and it's becoming more and more obvious that Disney is not interested in building their business or running it strategically in any sensible way. The big change with their cable channels, where for the first time, a cable distributor told them, hey, you know what? We're not going to take these goofy channels of yours. We're not interested in them. And you're going to be giving us your streaming service for free. That never happened before. Nothing like that has ever happened before to Disney. It has happened to Viacom, by the way, but it hasn't happened to Disney. Disney's response to that was to basically do nothing and not change the focus of their streaming service or the focus of their cable channels. And I know this because there's been no announcements. And also Disney exec Dana Walden said recently in an interview that they're planning on doing nothing differently. They're going to just take it day by day with the other cable companies. You can't do that when you have tens of billions of dollars invested in your linear networks and in your streaming service business. And they're being very careless about it. That on top of the stock getting trashed. And also, Nelson Peltz, he's aware that people are pushing back on Disney's agenda pushing with its intellectual properties. He's aware, he mentioned it in his last push, that Disney's flywheel is broken, meaning that they create a great intellectual property, and then that results in theme parks, it results in sequels, it results in merchandise, and builds the value of their overall library. Peltz said, hey, your flywheel is broken. You guys need to fix that, which just means make your customers happy and thrilled with whatever it is you're producing. That goes for all consumer products. Of course, Disney isn't doing that. Also, by now, Nelson Peltz has no doubt had the opportunity to get even more inside information from Bob Chapek, Ike Perlmutter, even other executives at the company, and it's long past time Disney was held accountable. It really all depends on how hard Nelson Peltz decides to push. If he pushes very aggressively and he openly and publicly says Disney is not tending to its business, it's focusing too much on pushing woke propaganda, and it's damaging all of its customer relationships, and it's damaging its intellectual properties, and it needs to be turned around. If Peltz does that, I think he's got an excellent chance of getting on the board. Once he's on the board of directors, it's all over for Bob Iger. But it all comes down to how hard is Nelson Peltz going to push. Let me know what you think of all this in the comments below. Always love to see your ideas. Please be sure you are subscribed to the channel. Click the bell for notifications. Give me a thumbs up, and I'll see you again soon with another video. And if I don't see you, I will miss you.